Hello, everyone, and welcome to the sixth edition of Finding Our Freedom. Finding Our Freedom is about the positive political and socioeconomic change we need to see in the Caribbean and how to make it happen. We aim to transform how Caribbean people understand the challenges in this region and empower everyone with actionable solutions to drive real change in our communities and countries. On this episode of Finding Our Freedom, I deliver my overview of the region's economic performance and discuss the major events and issues that will affect us this year. And just before I get into my presentation, I just want to shout out two very important Caymanians, Uncle Benny and Derek Jones, who celebrated their birthdays yesterday. So happy birthday to these two fine gentlemen. And now I'm going to show you my slides and I will address any questions afterwards. So here we go, the Caribbean Economic Outlook for 2026 on my next slide. So I'm just going to go through just the broad global picture for you. And according to the IMF, this chart is showing you the IMF's projections for growth globally for the next few years. And according to the IMF, global growth is projected at 3.3% this year, and it will slow slightly to 3.2% next year. Now, note that even amid all of this uncertainty that we currently face, the IMF actually revised these global growth projections up slightly last month compared to what they had originally projected in October of last year. So that's a positive development. But on the flip side, remember that global growth below 3% is actually signaling a global recession. And so while these numbers don't indicate that we are technically in a recession, we are not far away from one at 3.3% this year and 3.2%, of course, expected to go even slower next year than we are this year. And if you look at the chart, you will see that for the next few years, the outlook for global growth is roughly flat or steady at this level. But if you look at LATAM and the Caribbean line, which is sort of the dark black, I think it is showing up as here, the region is expected to edge up a little higher in terms of growth. Of course, no doubt propelled by countries like Guyana, which is showing double-digit growth, and Dominican Republic, and even Venezuela, which we now have high expectations for, which I will discuss later in this presentation. Now let's dive into the Caribbean regional economic overview. Apart from Guyana and the Dominican Republic, most of us are growing at rates of around 2 to 3%, as you would see in this chart. Now, Jamaica is expected to recover strongly next year, but will show economic contraction this year, as you see on the chart. And growth for all of us, however, apart from Jamaica, is positive. And growth is generally seen as a positive thing, where people are earning more and livelihoods are improving. But I have a question for you. Is this growth that we're seeing in the Caribbean, Guyana, and otherwise, is it really working as it should for us in the Caribbean? Is it really making our lives better? On the next slide, you will see that the answer is we actually don't know. We do not know if this growth is making our lives better. And why don't we know? Because half of the countries on this chart have not measured poverty in over 10 years. Apart from the Dominican Republic, whose latest measure is from 2024, which is not that bad, it is actually embarrassing how old the poverty data is across the region. And if we are not measuring poverty, it means a couple of things. First, it means the authorities don't really care because it is incumbent on them to measure poverty. And second, and to address it. And second, it means that they don't even have a clue about the impact of their policies, whether these policies are working as intended or whether they are backfiring and making us poorer. And post-pandemic in particular, we are seeing so much evidence of discontent, which suggests that people are feeling worse off. And we saw this play out in the elections across the region last year, which I will talk about in other slides. Now, according to the UNDP's Human Development Report, Latin America and the Caribbean experienced the steepest drop in human development indicators globally during 2020 and 2021, which is, of course, when we were in a pandemic. And although there was some recovery afterwards, the region as a whole has not yet fully returned to pre-pandemic human development levels, according to their latest reports. And the UNDP analysis also note that the pace of human development improvement in the Caribbean has slowed after 2020 compared to the pre-pandemic period. So even if our authorities are not measuring poverty, the UN is measuring the human development indicators that shows that we are not trending in the right direction. On the next slide, so 2024 was the biggest year for elections globally, but 2025 was the biggest year for elections in the Caribbean. The region held 12 elections last year. We have 5 new governments. We have 2 historic first female leaders in Anguilla and Suriname. And we have 1 unprecedented 3rd consecutive term in Jamaica. We saw some relatively surprising change in government in St. Vincent and the Grenadines, for example, and in Trinidad and Tobago. And these changes in government, in my view, were driven partly by the discontent with the high and rising cost of living, crime, and the demand for accountability, as we expected. When I last shared this presentation a year ago, we expected this to happen. And I shared those thoughts about a year ago in my last Caribbean Economic Outlook presentation. In Barbados a couple of days ago, actually today they have a day off to celebrate, the Prime Minister, Honorable Mia Amor Motley, won her 3rd election in 7 years, where she's won every single seat, which is absolutely historical, right? To win every single seat the first time, the second time, and now the 3rd time. I mean, I maybe even it's a global first, I don't know, but for sure it's a first in the region. But what is interesting is that they had in Barbados 2 days ago the lowest voter turnout ever in Barbados. And also they have had some of the lowest voter turnout rates ever in the region. We have 2 elections remaining this year. We have Bahamas and Haiti, and both carrying pretty high stakes. So in Bahamas, they're facing cruise tourism pressures, fiscal and economic vulnerability, which I will discuss a little bit later. And of course, Haiti perennially is still struggling to even hold elections amid gang rising and severe gang violence, unfortunately, for Haiti. On this next slide, we're going to talk a little bit, I'm going to spend a little time talking about the voter turnout issue we're having in the Caribbean. And while we thought that the 40-something% voter turnout in Barbados in 2022 was an anomaly and it was due to COVID concerns, actually this week's election voter turnout was even lower by all accounts at this point in time. And this tells us that something else is happening, as with Jamaica last year and St. Lucia, as you can see on the chart. When less than half of your electorate shows up to cast their vote, do you really have a mandate? Our constitutions are largely silent on this matter, which signals the need for urgent constitutional reform, because the whole basis of democracy is that the voice of the people is all powerful. But when the majority of the people are dissatisfied with all of the choices available to them in terms of who to vote for, then there should be some mechanism to address this. And right now, as an electorate, we have no options to address this. It begs the question of whether are we really fully functioning democracies. The 2024 Democracy Index, prepared by the Economist Intelligence Unit, examined why, and I quote, why representative democracy is not working for large numbers of citizens around the world. There is a growing consensus that the democratic model developed over the past century is in trouble. But there is less clarity about why people are so disenchanted with their democracies. In 2024, the biggest year for elections ever globally, popular disaffection with the performance of government was expressed in an anti-incumbent backlash and rising support for populist insurgents, quote, end quote, by the Economist Intelligence Unit. Caribbean people are voting with their feet by staying home. Meanwhile, next door, as you would see on the right-hand side of this chart, Venezuelans are desperate to vote. The 2024 election that Maduro had lost had a 59% voter turnout, despite the fact that there was active voter intimidation, opposition leader was banned, and decades of authoritarian rule, as well as the fact that 7 million people were forced to flee the country. People lined up in the sun, knowing that the regime might steal their vote anyway, and yet they came. Think about that for a minute. People take huge risks to come out and vote in Venezuela, and we in Barbados, Jamaica, St. Lucia, for example, where more than half the electorate stays home, perhaps we are part of the growing global dissatisfaction with the democratic system and the outcomes that it has or has not produced. My own conclusion about this global phenomenon is that it's not democracy itself that we are unhappy with. We are dissatisfied with the social outcomes being produced by the authorities in our countries. But the problem is not that the democracy is not producing these social outcomes that we desire. It is that the historically record high levels of inequality that we are experiencing is producing these substandard social outcomes. You see, when the elites are so powerful that they can shape policy in their favor at the expense of the rest of us, then democracy is unable to deliver true representation. And inequality has been proven to cause poverty. So maybe this is why we are not measuring poverty in the Caribbean. If only the interests of the elite are heard, then there are no then the ones who have representation are the elites, not us. And based on their influence over policy, their power grows. And here we are, the rest of us, unable to decide who to vote for because both sides have failed us. On the next slide, let's go a little deeper into the topic of Venezuela, where there has been noticeable economic reactivation. For example, the Caracas Stock Exchange saw a hockey stick uptick after Maduro's capture. That's a signal of pent-up economic potential being unlocked. Housing and vehicle prices are also beginning to recover in Venezuela. Remember that Venezuela is sitting on the world's largest proven reserves of oil. And now it is potentially open to private investment and US oil companies, meaning a booming economy next door to us, searching for goods, services, and investment partners. The US Embassy reopening in Caracas means that we have restored commercial flights, consular services, and investment facilitation. Also, the regime in Venezuela seems to be cooperating with the US so far. Maria Corina Machado, in the CBS interview, explicitly said that when Venezuela is free, the Cuban regime will follow, the Nicaraguan regime will follow. That means that we have a potential domino effect of democratic economies opening up across the hemisphere. We have a potential for reversal of migration of skilled Venezuelans going back home as well, which is something we're seeing next door in Guyana. The Economist poll shows that 80% of Venezuelans expect things to get better in 12 months. Most of them want elections within 6 months. Trump is talking about years of US oversight. 52.7% of Venezuelans believe that oil is the US's real priority rather than human rights. And the gap between what is being hoped and the reality of what they are experiencing in Venezuela is where the recipe for instability lies. So we hope that they get what they are hoping for, because 92.2% of Venezuelans are grateful to Trump, but 93.5% of Venezuelans reject Delcy leading the transition. And that's the gap between gratitude and reality. 83.5% of Venezuelans still fear arrest for opposing Chavismo because the regime hasn't yet left. And how all of this unfolds, of course, has real implications for the Caribbean, especially those of us closest to Venezuela geographically and politically. Next slide. Of course, politically, that brings me to Cuba. Cuba is experiencing yet again a humanitarian crisis, partially exacerbated by the January 29th US imposed oil blockade. The US embargo, that has been around for over half a century, is estimated to have cost Cuba over 130 billion, or to some estimate 144 billion US dollars in total accumulated damages over 6 decades, according to the UN and the Cuban government. Recent data suggests that the blockade costs Cuba approximately 7.5 billion US dollars annually, equivalent to roughly 20 million US dollars per day. And this is a population of roughly around 11 million people. And while Cuba can trade with nearly all countries globally except the US, the US's embargo has secondary sanctions, such as penalties on foreign banks and firms, as well as ships. And all of these secondary penalties raise the cost of doing business and exporting to Cuba, importing from Cuba. It limits financing opportunities, and it deters investment. Estimates suggest that this embargo, again, as I mentioned, has cost around 144 billion, according to the UN. But internal factors also play a role. And these 2026 add-on oil-related tariffs and blockade are amplifying the effects that Cuba was already reeling from. Mexican aid arrived a day or two ago, and you can see this picture of the president of Mexico there. And an international flotilla will set sail in the coming weeks, bound for Cuba to deliver humanitarian aid to the island. The flotilla is made up of a coalition of social movements, trade unions, and humanitarian organizations that seek to break through the siege imposed by the USA to bring food, medicine, and supplies to the Cuban people. And of course, in Cayman, you have had the effects of Cuban migrants reaching your shores. This example of Cuba shows us, however, that everything is downstream of energy. And on the next slide, you will see what I'm trying to refer to. Along with Sol Ecolution, which is the renewable energy subsidiary of Sol, which is the largest mover of petroleum in the region, we produced the Caribbean Energy Price Index, which clearly demonstrates the high cost of electricity across the region and the power of renewable energy to bring these costs down. On the next slide, you will see that we have only 6 countries with electricity costs that are below the global average. So the global average is the lower of the 2 horizontal lines you see on that chart. we have only 6 countries in the Caribbean that have electricity costs below the global average. And these 6 include Trinidad and Tobago, which mostly uses natural gas, its own natural gas, to produce electricity. It also includes Suriname, which is an oil producer, and it includes the French jurisdictions in the Caribbean. And all of those of us on the left-hand side of this chart, including Cayman, some of us have some of the highest electricity costs in the world. And this is making us less competitive and therefore less prosperous. On the next slide, you can see clearly that those on the right-hand side that have some of the highest renewable electricity production levels as a proportion of total electricity produced, they also have some of the lowest overall cost of electricity, which of course one would expect to see. Renewable energy adoption is a no-brainer. But in most countries, what is holding us back from higher levels of renewable energy adoption is the legislative and regulatory frameworks which the governments have the power to change if they wanted to. Let's look at the next slide, and I'll explain to you what we've done here, where we take into account the purchasing power to show how burdensome the cost of electricity is in the Caribbean. I'm sure many of you would have heard of the Big Mac Index, where the Economist magazine looked at the price in US dollars of a Big Mac in most countries all over the world, wherever there are Big Macs being sold. And what that does is it tells us the relative cost of living in different countries. And therefore, it tells us about purchasing power of a US dollar in each of those jurisdictions. For example, the most expensive Big Mac in the world is in Switzerland for about 8 US dollars, whereas you can get Big Macs in India for less than half that price. So what this means is that for the same money, you can either get one Big Mac in Switzerland or 2 in India with some change left over. And this means that purchasing power of money in Switzerland is less than half of what that is, of the purchasing power of money in India. So what we did with this index is we looked at the cost of electricity in US dollar terms across the Caribbean, and we adjusted it for the relative purchasing power across all of these countries that the data was available for, to see how affordable electricity is. And what we found was quite interesting. To me, the most stark example is Barbados, because in nominal terms, 2 charts earlier, you would have seen that Barbados had an electricity price that's roughly the same as the average for the Caribbean. And actually, all of these charts is downloadable on my website. So you can go have a look and download the PDF, print it out, and look at the methodology and have a good read. But as I was saying, 2 charts earlier, you would have seen that Barbados had a nominal electricity cost in US dollar equivalent that's roughly around the average for the whole Caribbean. But when you look at the purchasing power adjusted cost of electricity, we see on this chart that Barbados now has the 3rd most burdensome cost of electricity in the region. And this would be based on factors that drive up the cost of living and drive down the purchasing power of dollars in Barbados. And these factors are such as taxes, the cost of food, the cost of housing, the cost of utilities, etc. Cayman is also interesting on these charts. 2 charts ago, you would have seen that Cayman had above average cost of electricity, above Caribbean average, and it moved up higher on this chart, as you can see here, again, still with above average cost of and burden of electricity costs when adjusted for purchasing power. All of this tells us that we have a problem in the Caribbean. But the good thing is we also have a solution. And it's really now about holding our authorities to account for driving higher levels of renewable energy adoption with urgency. And I saw in Cayman that your premier recently talked about this. And so that's quite encouraging. I want to switch now to go over the country by country overviews in the Caribbean. And the things that I'm going to focus on for all countries is our external position. What do I mean by that? External position meaning the strength of your foreign exchange reserves, the strength of your currencies. And I see this as a major vulnerability across the region, affecting almost every country. And we must take a hard look at our very economic structures to address this problem, where most of us have foreign reserves that are 100% borrowed, which means they have to be repaid with interest. And that means they're not really truly reserves. And most of us have printed too much money in local currency so that what our reserves can defend in terms of defending our currency is defending our exchange rates, and it puts pressure on those very reserves to defend our currency. And all this speaks to structural problems where we spend on imports more than we can afford to. So we have to borrow to pay for these imports, which is insane. And again, energy is a big part of this structural problem, as well as it's a big part of the solution. On the next slide, let's start with, and I'm just going to go in alphabetical order here. So let's start with the Bahamas. The Bahamas has a level of foreign debt that's almost 6 billion US dollars, and it has usable reserves of about 1.3 billion US dollars. And this means that reserves are more than 100% borrowed. And while the exchange rate is 1-to-1, one Bahamas dollar to one US dollar, the ratio of the money supply in Bahamian dollars to the level of reserves in US dollars, which should really ideally resemble 1-to-1, is actually 7.4 to 1. And import cover is well below the precautionary 3 months benchmark at 2.2 months in Bahamas. So Bahamas has some significant external weakness to deal with. On the next slide, let's look at Barbados. I should point out Bahamas and Barbados. You will notice that reserve levels are increasing, however, which means we're borrowing more and putting it in reserves. Barbados has foreign debt of almost 3 billion and reserves of about 1.4 billion, which is about 6 months of imports. It means that their reserves are more than 100% borrowed. And while the exchange rate is 2-to-1, the ratio of the money supply in Barbados dollars to reserves in US dollars, which ideally should resemble a 2-to-1 ratio like the exchange rate, it's actually 3-to-1 in Barbados. But by the way, this is not terrible. It used to be much higher. I remember it was something like 12 some years ago. So doing a lot better in Barbados. But so we have seen improvement, but we still have reserves that are more than 100% borrowed. Let's look at Bermuda. Bermuda has a currency board system in place, and so does Cayman. So does the OECS, the Eastern Caribbean. What does that mean? A currency board is where you do not print local currency unless you have 100% backing in US dollars. And so it's a bit different how their reserves are held. It's held by the Monetary Authority, and the Monetary Authority prints the local currency. But this is a country where the reserves system and the reserve management is a bit different from the countries I just discussed, like Barbados and Bahamas. And they have a much stronger currency. These countries with currency boards have much stronger foreign exchange management than do the rest of us who do not have a currency board arrangement. But Bermuda has foreign debt of 3.3 billion versus reserves of 262 million. So again, it's not a fair comparison with the other countries, but it looks like there's a lot of borrowing in Bermuda, and they need to pay attention to that. On Cayman now, on the next slide, again, Cayman has a currency board arrangement, has ample foreign exchange to cover its debt, which is only 472 million, ample foreign exchange to cover its imports. And this is why regional banks are so keen to buy banks in Cayman. But we have to keep an eye, and I do hope that the authorities in Cayman are watching to see if US dollars are being reallocated from Cayman to other countries where these banks, these regional banks, operate. As a matter of fact, I urge them to pay attention to this. On the next slide, we see that Dominican Republic has foreign debt of about 45.5 billion and reserves of 14.7 billion, which means, of course, that reserves are more than 100% borrowed. And the money supply to reserves ratio, of course, so the exchange rate is 62 to 1. And we would expect the money supply to reserves ratio to resemble 62 to 1. It's actually 59 to 1 in Dominican Republic, which is quite good. And they have 4.9 months of import cover, which is also quite healthy. So Dominican Republic is not doing too badly, I would say. Let's switch to Guyana, which you would expect, as you would see on the right-hand side of this chart, lots of volatility, but rising levels of foreign exchange reserves. Guyana has a foreign debt of almost 3 billion and reserves of 1.3 billion. So quite similar numbers to Barbados. But while the exchange rate in Guyana is over 200 to 1, over 200 Guyanese dollars to 1 US dollar, the ratio of money supply in Guyana dollars to reserves in US dollars, which should resemble 200 or so to 1, it's actually 657 to 1. And they have reserves of less than 1 month of import cover, which is very low. And you might think, hang on, isn't Guyana the world's most recent oil exporting nation? And they're, I guess, facing an oil boom. Yes, all of that is true. But Guyana, I think, is suffering something that the former finance minister, Winston Jordan, called the pre-resource curse, not just the resource curse, the pre-resource curse. And he said this to me in an interview you will find on my YouTube channel some years ago. And what does this pre-resource curse mean? Well, everybody's anticipating a boom. So what they do is they import things. They build buildings and hotels and apartments, and they buy things to resell, including property. And a lot of what they're doing and buying and the economic activity is in anticipation of a boom, in anticipation of asset prices going up so that you can sell later at a higher price. And all of this puts strain on the US dollars available in Guyana. And so it really makes the situation quite delicate for Guyana in terms of foreign currency. As I said, less than about a month of import cover. It's quite alarming. But we know they have oil in the ground. We know that they're exporting the oil. And we know that they have US dollars coming in volumes that Guyana has probably never seen. But they're also spending it at levels that Guyana has probably never seen. Let's switch to Jamaica now. Well, of course, we know that Jamaica was hit by one hurricane after the next. So I'm not saying what I'm going to say to pour more doom and gloom over Jamaica, because of course Jamaica wouldn't have had to borrow the amount that it has borrowed in the last couple of years were it not for these hurricanes. But Jamaica has foreign debt of about 13.6 billion and reserves of 6.3 billion, meaning that reserves are more than 100% borrowed. But import cover is over 8 months. And as you can see, there's an upward trend of reserves in Jamaica. And while the exchange rate is about 156 Jamaican dollars to one US dollar, the ratio of the money supply in Jamaican dollars to reserves in US dollars, which should ideally resemble a 156 to 1 ratio, it's actually about 191 to 1. So, not terrible in terms of some of the figures we've seen, most notably Guyana just now. It's not terrible, but it's something that we need to pay attention to, especially with the vulnerability that Jamaica is experiencing based on natural disasters. Of course, this is a challenge we all face where a lot of our debt load is based on the fact that we have to borrow to reconstruct every time we're hit with a natural disaster. And in the coming weeks, I recently did an interview with Sasha Jatan Singh and Dr. Priya Mohan, who are very active in the climate space, talking about climate justice and how this unfair burden of borrowing to finance reconstruction is causing some of these fiscal and external crises we are seeing here in the Caribbean. And it's very unfair because we account collectively, SIDS globally account for less than 2% of global carbon emissions. So look out for that interview. Let's switch to Suriname on the next slide. Suriname has a foreign debt load of about 4 billion US dollars and reserves of about 1.3 billion US dollars. So that means that reserves are more than 100% borrowed. They have about 7.1 months of import cover, which is quite healthy. And while the exchange rate is 38 to 1, 38 Surinamese dollars to 1 US dollar, the ratio of money supply in Suriname dollars to the reserves in US dollars, which should ideally resemble a 38 to 1 ratio, like the exchange rate, it's actually 82 to 1. So that's something Suriname needs to pay attention to. And the last country that I will discuss is Trinidad and Tobago. And you will notice something here interesting on this chart. All the other charts were trending upwards. This is the only reserve chart in the whole Caribbean that is in secular decline for many, many years, right? It started somewhere around 2013, if my memory serves me correct. Trinidad and Tobago has foreign debt of about 5.5 billion US dollars and reserves of about roughly the same, 5.4 billion US dollars. So just slightly over 100% borrowed, whereas most other countries are many times borrowed. We have about 6.3 months of import cover, which is very healthy. And while the exchange rate is about 6.8, $6.80 TT to 1 US, and you would expect the ratio of local currency to US dollars in reserve to be around 6.8 to 1, like the exchange rate, it's really about 19 to 1, which indicates how much pressure there is on our exchange rate in Trinidad and Tobago, how much pressure is on our reserves, as you can see in the chart, going down steadily. Let's go to my concluding slide. And of course, I will then take questions from the audience. So here's what we need to pay attention to. Cuba and Venezuela. Of course, Cuba was being propped up by Venezuela economically, Venezuela being managed politically by a regime that was heavily Cuban in Venezuela. We have a serious potential for economic restart in both countries. And that could mean a lot of potential for the rest of us in terms of those of us who will trade with these countries, right? Big populations, a lot of pent up investment and consumption demand that will need to be satisfied if everything stabilizes. Again, if everything stabilizes in Cuba and Venezuela, which of course we hope it will. And so this is something to pay close attention to. In the meantime, we have immediate and severe social risks. There are people who are quite vulnerable, as we know in Cuba, and we can't ignore that fact. Of course, we can't just be approaching this and looking at this with dollar signs in our eyes, right? These are our brothers and sisters who are suffering in the region, and we hope that from a social and political perspective, there will be peace and there will be stability in both countries. And I really look forward to seeing more positive news of that nature coming out for both countries. As we discussed in earlier in the presentation, we've had low voter turnout across the region, but the ones I highlighted, Jamaica, Barbados, and St. Lucia, was where voter turnout was less than half, right? And it means that we have weak mandates in those countries, in my view. But it also means that we have some issues to address as it relates to, I think, the effect of inequality and the power of the elite in shaping government policy and shaping policy in a way that gives them more power and actually removes power from the wider electorate. That's what I think is happening. I encourage everybody to agitate and advocate for their country, their government, to measure poverty and inequality. Otherwise, we are just guessing here. I mean, there's of course anecdotal evidence that would suggest that this is what's happening. I do believe this is what's happening, but we need to measure it because we can't solve it unless we measure it. So I urge you to advocate for that in your own country. I actually think that this refusal to measure poverty is a reflection of the inequality. Inequality causes poverty, and it's a dereliction of duty on the part of the authorities. We talked about high electricity costs and the fact that everything is downstream of energy, and these electricity costs affect everything else. But we have solutions. And based on an ICJ ruling last year, which I've discussed in my other interviews that you would see on my YouTube channel and on this show, we have legal, if not moral, obligations around the transition to renewable energy and bringing down our carbon footprint. And so the urgency of renewable energy adoption is not just economic, it's not just social, it's not just moral, it is also legal. We've also had recently a ruling in the courts in the Netherlands, which demonstrated that the Kingdom of the Netherlands was discriminating against their colony, Bonaire, in the Caribbean, for not protecting its people and property against the climate crisis as much in Bonaire as they were doing back home in the kingdom itself. So, as an overseas territory in the Cayman Islands, I was cited in an article written by James Whitaker this week in the Cayman Compass. We talked about this issue. What are the implications for other colonies in the Caribbean, and what are the legal obligations of the UK, for example, in protecting Caymanian people and property from the climate crisis? They have the same obligation to you that they do, I think, to their own people in the United Kingdom. We have a situation where the USA's policy and presence in this region has deep and lasting impacts on the Caribbean. All of it is not negative. I would quickly suggest all of it is not negative. I know we have a lot of anti-US sentiment in the Caribbean, but to be fair, if they can return stability to Venezuela and Cuba in particular, if they can truly address some of the drug problems we're having, I would welcome this kind of intervention. Again, it all depends on how it plays out. Because crime continues to affect us socially and economically, not just crime related to the drug trade. We also have a lot of white collar crime. And that's something we really need to address in this region. And we are actually still the region with the highest homicide rates globally. And that is, if we want to be serious about tourism as well, that is something we have to address. And apparently, we can't address it ourselves. We need our bilateral and multilateral partners to help us, like the US, but others as well. And with everything that's going on in the world and all of the uncertainty that we face, I want to suggest that we need to focus on fixing what we can control and what we can influence at home, and not get distracted with the external developments that we have no control over. And we have a lot to fix here in this region. I don't want to harp and belabor the point, but renewable energy is one of them. And so I've just completed my presentation. There you can go to the last slide, find out there how you can sign up for my free monthly report, and also anything that I publish, like my energy index that I did in conjunction with Soil Ecolution. And now I will take questions. Let me switch to see where your questions are. Okay, so somebody asked, will my presentation be available as a takeaway? Yes, it is. So you go to my website, marladukharan.com, go to Insights. It's one of the tabs. Click Insights, and you will find it there. You will also find the energy index on my website as well. I am seeing some questions here. Let me run through them. Okay. I agree that increased renewable energy capacity is crucial, and I would add that it cannot be a standalone solution, but rather a key component of a more efficient, circular, and resilient regional economic system. I agree 100%. I mean, I don't think anybody would suggest that 100% solar is where we need to go. Of course, we have base loads that need to be addressed, and my understanding is we need something a lot more stable than solar, whether it's hydrocarbons or some other mechanism, batteries, for example. But that's actually a key point, and I endorse that comment. Thank you for paying attention and making the comment. We have another question. What are some of the scenarios being created by the new geopolitical landscape currently unfolding? Well, I think I discussed some of them. Some of the positive scenarios, I think, is for us, if we have stability, political and social stability in Venezuela and in Cuba. These are big markets where they've been starved for a while from investment from the outside world and doing business with the outside world the way they would like to and the way they used to. So I think these are two very big opportunities potentially for us in the region. Again, once we have social and political, which economic stability will follow. I do see those as two of the major scenarios or opportunities being created. The other one, I think, like I discussed throughout the presentation, a scenario, but not a positive one, is that, we are really in a position where we're trying to hold on to reserves in US dollars. We're trying to save US dollars because this is what we need when there is a crisis. We need it every day for imports, but we need it more so when there's a crisis. But we're borrowing a lot. And so the scenario that this whole situation is of not just geopolitics and uncertainty, but also geoeconomics and also the climate crisis is creating a kind of vulnerability that, where I think it's becoming more acute with respect to the amount of reserves that's borrowed that we have to pay back with interest. So that's a scenario that I discussed throughout the presentation. I see another question is, what should small and medium enterprises in Trinidad do to secure their financial future? That's quite a broad question. I think that a lot depends on what area of the economy you're operating in. But being able to earn US dollars is gold right now. I mean, not just in Trinidad, but especially in Trinidad, but in all countries in the Caribbean. I think if you can find a way where you can earn US dollars, I think that could be potentially very beneficial. But on that note, I want to say something. So I've had people reach out to me. I've had people reach out to me saying they've been asked to pay bills in US dollars in Trinidad and Tobago. And not just asked to pay bills, it was demanded. Like, this is a bill for some work I've done to fix your computer, or this is a bill for some item that I'm selling to you, and you must pay me in US dollars. You cannot pay me. I will not accept TT dollars. That's actually against the law. And that's something a lot of people don't know, that the only currency that's legal tender in Trinidad and Tobago is Trinidad and Tobago dollars. What does legal tender mean in any country in the world? Legal tender means that within the borders, the geographic borders of your country, whatever is legal tender must be accepted in payment and settlement of any obligation within those borders of your country. Now, that doesn't mean somebody could ask you, by chance, could you pay me in US dollars? They can ask, and you can refuse, or you can say yes, especially if they're giving you a little discount. It might, if they incentivize you, sure, that's an agreement between two people. But based on the fact that Trinidad and Tobago dollars is the only legal tender within the borders of Trinidad and Tobago, that means nobody can demand any other currency as payment and settlement of any obligation within our geographic borders. They can ask, they cannot demand, and they must accept. If you tell them, I can only pay you in TT dollars, according to the law of what legal tender means, they must accept your Trinidad and Tobago dollars if that's what you choose to give them. Bear this in mind, people. This is very important. I'm seeing another question. What could it mean for the region if the US dollar is weakened? Now, the US dollar has weakened. And the US dollar is now less than 60% of international reserves, where it used to be years ago 80% and more. It is now less than 60% of global reserves, and it has weakened. The demand for US dollar globally has weakened, What does this mean? All of us are pegged to US dollars. All of our currencies are pegged to US dollars. And so, however the US dollar moves against, say, the euro, is how my currency will move against the euro. However the US dollar moves against the pound sterling, the Canadian dollar, any other currency globally, is how my currency will also move. Now, if the US dollar is weakening against, let's say, the euro, the pound sterling, the Canadian dollar, etc., it means that pricing in US dollars will appear more attractive, right? The euro will get more US dollars per euro. Somebody holding a pound sterling will get more US dollars per pound, and so on. Therefore, your pricing of this glass of coconut water that is, $1 US appears cheaper. And so what this means is that our exports appear cheaper to the buyer who is not holding US dollars, the buyer who is holding pound sterling, euro, Canadian, whatever. Our exports will be cheaper to them in their dollars, which is good for those of us who export in terms of making our exports appear more competitive in terms of pricing. So that's actually a positive thing. Where it is not positive is where we have to import, right? So our imports from countries which are euro, pound sterling, Canadian dollars, etc., it means we have to spend more in local currency equivalent to import from those countries. And so our imports become more expensive. So our cost of living goes up. And if you're importing to make something to re-export, then that has a pass-through that then makes your export more expensive. And a lot of us, our exports are actually have a high import component. So that's something that we need to think about. So there are positive effects of a weaker US dollar for us, but there are also potentially negative effects as well. At the end of the day, we need to produce more as much as we can. And the more that we can produce locally, the less our import component, the less our outflow of US dollars, and the less we are subject to the vagaries of the exchange rates moving globally. I just want to remind you, because somebody seemed to have asked again, will this presentation be available? It's on my website at marladukharan.com. Just go to website. Sorry, just go to Insights and click on Insights and you'll find it there. Somebody asked about OECS countries like St. Lucia. Unfortunately, I don't have the time to go through all 36 countries in the Caribbean. And many times some of these countries don't have up-to-date data. I'm not saying that's the case for St. Lucia, but it's very difficult for me to go through all the countries. I would encourage you to go to the Eastern Caribbean Central Bank website, and they usually have data for all of the Eastern Caribbean countries. The most up-to-date data that's available, you will generally find on the Eastern Caribbean Central Bank's website. I have another question. In my experience, one of the challenges with traditional economic outlooks is the ambiguous quantification of non-economic factors, that is, social and environmental costs and benefits, resulting in somewhat narrow and relatively short-term assessment. Is there a movement towards utilizing the emerging true cost accounting system to evaluate national and regional performance? I'm not aware of any such movement, but I mean, in terms of measuring performance, with the 2 or 3 minutes that I have left, what I would say is that have a look at what the Chamber of Commerce is doing in Cayman with the governance scorecard, where the government has articulated certain policy priorities and strategic policy initiatives or goals. And the chamber has articulated and has agreed with the government to create a scorecard like we used to have when we were in school, where we say, okay, you were supposed to do these things and you said you will do these things, and here we are 6 months later, what have you done? And this is actually following the EPOC in Jamaica, the Economic Program Oversight Committee, where the EPOC would hold the Jamaican government publicly to account on a quarterly basis for what the government agreed that it would do. I interviewed the chairman of the EPOC, Keith Duncan, a couple of years ago. It's on my YouTube channel. I encourage you to have a look at the interview to understand how the EPOC worked. I think the EPOC was probably the major underlying factor that helped Jamaica to achieve the kind of socioeconomic progress it's achieved in the past 12 to 15 years or so. And I encourage every country to have a look at that and see how they can incorporate accountability, holding the government to account regularly and publicly in order to achieve the kinds of goals that they articulate they will achieve, the ones we want them to achieve as well. And so I will leave you with all of everything that I've said so far. I thank you for paying attention. I thank you for your questions and your comments. I really appreciate it. I hope you all have enjoyed this presentation. It will be up on YouTube, so you can relook, as well as you can download the slides on my website, marladukharan.com/insights, or just click on the Insight tab. Thank you again very much, and I look forward to seeing you again in 2 weeks. Have a good weekend. Bye-bye.